basically, if you the market is up, even though if you look at the 3 months average, basically the market is up 15%. If you're looking at the last 3 months and the last 6 months also, basically the market is trading on average $15 million a month. So basically the trend, although it seems that on a daily basis things are looking quite flat, if you look at those numbers, basically the market is up 15% on a monthly average.
Well, elections a big focus on that end because of all the uncertainty it's bringing with it, Jean-Luc. Why? And, you know, some saying this is exactly why the market has slowed. Investors sitting on the sidelines waiting for these elections to come and go because they've been postponed, what, 7 times now?
Yes, seven times. Apparently, it looks that Sunday is going to be D-Day. Everybody seems to be ready for the final I should say finally the elections. So the campaign is supposed to end by Friday night, and so we're seeing the last candidate campaigning basically. So it looks that we're going to have our elections.
Well, looking at a few individual players then, I mean, telecoms company Sonatel still on the radar, but this stock doesn't seem to be trading on fundamentals right now.
Yes, I think that people are missing out some key things on Sonatel. Of course, as you know, people are, and most of the analysts are looking at EBITDA margins. And what they fail to realize is that Sonatel is basically deriving a much higher margins than its peers. On average, Sonatel is deriving 55%, whereas its peers are much lower. And the main reason for that is that Sonatel is an integrated telephone company. Basically, having all fixed mobile internet also gives them an operational room to maneuver and basically drive higher margins.
Where margins are higher, Jean-Luc, I mean, the question is, where is that next growth curve actually going to be coming from? Is that not a concern for you?
Well, that's another concern. I think that everyone realizes that Sonatel is having strong fundamentals, but the key question is where are they going to grow next? Basically, the last forays that they made in the Guineas, Bissau and Conakry haven't proven to be as successful as Mali, and so the market is really wondering where are going to be the next move, as most countries are being covered, and the last remaining are relatively small.
So to what extent then do investors need to start viewing the stock not so much as a growth stock to be chasing, but a value player and buy on that basis?
Yes, Sonatel, you're absolutely right. Sonatel is basically lower than its peers. Its peers are growing at an average 9%, and Sonatel is growing at 6%. However, Sonatel is deriving a much higher dividend yield. This stock is yielding, let's not forget that the stock is yielding 9%, whereas its peers are yielding 3%. So I think that you're absolutely correct. We can talk about the value play and the yield play.
Mm-hmm. Let's put some focus on the agro space. SAPH, a rubber producer, people basically looking at the stock with an 18-month perspective, it seems, because they're holding firm, holders considering valuation cheap and not ready to sell on that basis because of this 18-month perspective.
Yes, absolutely. We've seen that over the past couple of years where prices, international rubber prices have been firmed up. Yes, of course, the 2008 situation was played a major factor where the prices collapsed, but they've been rebounded even stronger ever since. And there's no, as you say, looking at 18-month spectrum, this is where they are, and people are quite confident that the prices are going to remain that way.
Just looking at a news item that's popped up, I mean, a very small IPO of BOA Burkina Burkina Faso is set to emerge on Côte d'Ivoire's BRVM index. It's a small deal, around $5 million there. What's the merit, as you see it, in listing small banks like this, Jean-Luc? Because many saying it's not really presenting much value where you've got these separate listings of BOA, Burkina Faso, Benin, Côte d'Ivoire, and then Niger.
Well, yes, that's absolutely right. One can question the BOA strategy of listing its small affiliates rather than to list its overall network. One can maybe argue that it's for control reasons, but looking at the facts, we're seeing very small liquidity on these different stocks. And I think that one can question the strategy, but one has to respect what they've decided.